Welcome to Mark Arnold's Finance. Today I want to cover what stocks I plan on buying now in June of 2022. This is pretty much the start of summer. I just did a video on what stocks to be buying before summer starts. There's a few weeks left, so be sure to catch that video. But not only do I want to cover the stocks I'm going to buy in June, I want to introduce you to something that I created that summarizes my portfolio that I'm going to show before I start any video in the future. This is going to make sure that I'm transparent with you guys and that you can follow along on my journey and see my growth or lack of growth. So before we get started, be sure to subscribe to my channel so you don't miss an episode. I really appreciate all your support. So let's get started. Now let's introduce you to the summary that I've built with my portfolio. I have this all in Google Sheets, so if you have any questions, be sure to comment below. I can help you guys out. But what I wanted to do here is at the top, show you the summary, the overall performance of my portfolio. So right now, as of the end of May, this is on Monday that I'm filming on Memorial Day, but I'm at a 7.71% gain, and that comes out to $2,743.94. From there, I divided it out by the sectors of the economy and a few extras. So we see technology, healthcare, below there is financial, consumer staples, off to the right discretionary, consumer discretionary. Then we have below real estate, industrials, and then below that we have materials, energy, and then the communication services. Now the few that I have that are different are all the way on the right. At the very top, I have an international ETF, which is VIXIS. So that one's a standalone one. And then the one at the bottom is, or shall I say the two at the bottom, one is a dividend ETF by SCHD, and then I forgot to mention I do have utilities down there in the form of an ETF again, Foodie. So how I like to structure my portfolio is the sectors that I'm not as knowledgeable in, I just have an ETF to put my money in. That way I'm diversified and I don't have to worry about my lack of knowledge in that area. I just let a fund handle it for me. So this is what I'm going to show you guys every single video. And not only that, but I've built it so that when it's in the negative, it shows up in red, as you can see, or in green if it's in the positive. So this is just going to really help me be transparent with you guys, and I am welcoming any advice or recommendations you have, but this is what I built so far, so let me know what you think. From there, let's talk about the stocks that I want to buy in June. So we're going to start by looking at this at the very top left, the technology sector. I do not want to get any extra technology stocks at this point, but I would love to add one more Amazon share. I did buy one a few weeks ago. I made a video on why I think it's the best opportunity in the market, and I still believe that is true. So be sure to go catch that video if you haven't seen it. But Amazon to me is undervalued, not only by the stock market, but by us investors. I don't think we are factoring in enough for its Amazon Web Services portion of its business. I think this stock is going to really have a big upswing within the next couple years, and I think now is the time to buy in. So I'd love to get one more share. It is expensive. I think it's back up about 2,200. It fell down to near 2,000, but we'll see what this next week or two presents, and hopefully I can buy in below my average of $2,200. I'd also like to average down in Meta. Now Meta gets a lot of hate. I think it's oversold, highly oversold, because I think people forget just how much cash this company makes. If we look here at their revenue, back in 2010, they were just below $2 billion. And now, as of the end of 2021, they're at almost 118 billion. That growth from 2 to 118 billion is massive. And I think people aren't factoring in just how much cash flow this company makes. And I think people are just, the news is something that people just, I think, way too heavily, factor in too heavily. You need to think outside of that. Meta is a very strong company. They still have the largest social media user base out there, and I know that they are going to continue to make lots of money despite Apple's little barrier that they put on there with their privacy settings. They're going to figure out a way to get around that and start making a lot more money with its advertising side of things. Plus, they're getting into the metaverse, which this is something I respect if you're on the other side of it, but I really do think this is going to be a big part of the future. So I want to average down in Meta. So in technology, I want to buy another share of Amazon and lower my average in Meta. As you can see, I'm down almost 26%, so definitely want to average down. In healthcare, I don't plan on buying any stocks. I think right now There's no big deals in that sector, so I'm just going to leave that one alone. Internationally, I do want to add some shares of VIXIS. It's an ETF. I think that, obviously with the international geopolitical conflicts, our own conflicts with China has led this to really take a dive, this ETF, along with all the international stocks. So I think now, and probably over the next year, is good to buy international, probably ETFs. I think that's the safest, just in my opinion. I was never a fan of buying BABA, but that's just my opinion. I've stated it many times. I just think it's too risky to own Chinese stocks right now. But with this VIXIS International ETF, I do want to add some there. Moving on to financials, the only one I'll probably add to is T. Rowe. I made an in-depth video on this too, but it's a very sturdy, strong company, and I think it's at a great valuation right now. It dropped quite a bit, probably about a week and a half, 2 weeks ago. I didn't have the funds to buy in, but this is one I'd love to add some money to, so that's one I'm eyeing pretty heavily. In consumer staples, you'll see that Tattooed Chef, which is TTCF, is down. It's my most in the red company, and it's almost 57% in the red, so I do want to average down on that. I am bullish on this long term, not in the short term, but long term. So I think by putting a little bit here and there, that's what I plan on doing, and I want to add some in June. In consumer discretionary, I only have Home Depot. What I plan on doing there is if it goes into the red, probably more than 2% for my portfolio, I will add a share. Home Depot to me is just, Amazon proof. With the summer months coming up, it's going to be a great stock to invest in now before the second and third quarter earnings, which I think they will beat. People are wanting to fix up their homes. They're wanting to fix up their yards. There's a lot of new home buyers in 2020 and 2021, and they're going to be doing a lot of DIY things because right now hiring a contractor and going that route is just too expensive. In real estate, I'm pretty heavily invested in real estate, so I might not add. If I do, it would be Vici if that dips into the red. So Vici to me is an experiential REIT. It's mainly has a lot of properties in the Vegas area. Vegas is here to stay. I think it'll remain the #1 entertainment destination for adults and also many families for the rest of my life. So this is one I'd love to add more to if it dips into the red. Now industrials, I have 3M there. Fidu, the one next to it, that's an ETF. But 3M, I love 3M. This is a great dividend-paying company. Their products are everywhere. I think this company, due to lawsuits, has just been oversold. So at this point, this is one that I think is absolutely a buy, and I would love to add more. Now, with my dividend ETF, SCHD, the one thing I regret is I was focusing a lot on other stocks. I think this is one of the best ETFs out there, and I haven't added to it in a long time. So I need to start getting in the habit of adding to this, and that's what I plan on doing. So hopefully a few shares in June. Materials, I don't plan on adding anything here this month. It's just one I'm not that educated on. I did research on DuPont, which is DD. Obviously, it's done well for me. It's almost up 35%. But I have a small position, and I'm not sure what I'm going to do with that one long term. I might sell that and just put it all into that ETF FMAP. But we'll see what I do, but I don't plan on buying any material stocks. Energy, definitely not. I think right now you'll see it's almost up 100%. I don't have that much in it, unfortunately, so I don't think it's even worth taking some gains. But this is one I think with the high gas prices, that's why this is up so much. So when that turns around, I think you'll see this one dip pretty heavily. So I will not add to energy. Now communications, I have AT&T and Warner Bros. Discovery. AT&T, I used to be in the red pretty heavily. Now I'm only down 7%. I will not be adding to this. Warner Bros. Discovery, I think, has huge potential. I really do like this company, which is why I haven't sold it since it spun off of AT&T. It is down 35%, and I'd love to add to this. This will probably be on my low end of my list if I get the opportunity to have the funds to add to it. But I do want to average down into this over the summer at some point. So Warner Bros. Discovery, possibly a June buy. Last is utilities. I have an ETF, which is Foodie. I don't plan on adding to this. Utilities is just one of that slow growing, steady, kind of dependable sector of the market. And right now, I don't plan on adding. So outside of my portfolio, there is one stock that I am eyeing heavily, and that is Costco. I love Costco. It just reported its earnings last week. I was really hoping for some negative news with it, some negative earnings, but overall it was very positive, which sent the stock going back up, not massively, but it did send it up. It was down near, I think, $416. Now it's up near $450, $460. So if there is any economic downtrend where it affects the whole stock market and Costco gets closer to that 400, or dare I say even in the 300s, I want to buy heavily into Costco. For me, like I said, it's Amazon proof. It's got the membership where you have to be a member, so that's dependable revenue this company has. It's a totally different setup than any other store. And they are opening 28 new stores in 2022. They have a big international opportunity to open stores. And every time I go, it's busy. I love shopping at Costco myself. It's where people can save money, but also have a lot of options, and they are always switching their products, and they make it fun. Going to Costco is fun. I'm just gonna say it. But this is one I think is a strong consideration for me in June, should it dip any decent amount, because I do think it's overvalued. Maybe not the long term, but it's just kind of hard to buy at this price point right now. Its PE ratio is pretty high, but for me, that's when I'm thinking of buying. So there you have it. There's my new summary, portfolio summary tab that I created. This picture to show you guys, to be transparent with every video. I won't always go in depth like this, but I'll at least show it and just show you a quick update of my portfolio. And then these are all the stocks I plan on buying. There's a lot on my list, so there's definitely going to be a handful that I won't be able to buy just due to the lack of funds, but there are a lot that I really am wanting to buy. Amazon is probably number one. I still think that's the best opportunity in the market. I did a video. Be sure to go through my channel, find that, because I gave a lot of good information on that. So there you have it. Let me know what you plan on buying in June, and if you agree with what my buys are or disagree. Again, a lot of those are me adding to stocks I already own in my portfolio, with the exception of Costco. So let me know if you're a Costco fan or do own it. I think that's a great company and would be a great stock to own. So there you have it. Let me know what you guys think of everything, and I hope you guys have a great day. We'll see you next time on Mark Arnold's Finance.